Yes, a very good morning to all of you. Right, so audio, video, all good. Again, little bit of change in the technical arrangements today, but I think that it just confirm, yes, whether it's fine. Okay. Right, so you're happy that one chapter of ethics is now done, right? That we have completed our entire discussion regarding the ethics. Like, so yesterday we completed with the Council General guidelines over there, right? Wherein we talked about the logo guidelines and the networking guidelines. You remember networking? That if the firm of CAs or the small firms, they come together and they create a network, then what do they use after the name of that network? Right, what to differentiate it from a firm, where firm use and company and associates. For a network, the one they could say that they are ABCD network, or what else can they say? Yeah, yes, they can say that they are ABCD and affiliates. And if they have a lead firm, then they can say A and company affiliates. Okay. And before entering into a network, they can first try, entering into an alliance over there. Okay. Right. So what is network? It says it's a larger structure, right? It's a larger structure, right? Where firms are coming together, which is what is the first basic thumb rule for a network. It says it should be aimed at cooperation. If you don't have any aim of cooperation, you don't want to look at each other's faces, it says don't enter into a network. So one thing, it says it has to be aimed at cooperation. And then you, in addition to the aimed at cooperation, you could be having common brand name, then you are deemed to be a network. You could be having a common business strategy, you are deemed to be a network. You could be having the sharing of the significant professional resources, deemed to be a network. You have common quality control policies and procedures, it says deemed to be a network. Right, and then that network, the name has to be approved by the institute, and once it is approved, within 3 months, your network, you have to get it registered with the institute. If you enter into a networking arrangement outside India, then within 30 days of entering into the networking arrangement, you have to inform to the institute. Any change in the constitution of your network, within 30 days, you have to inform the institute. And again, for your network, there has to be the framework, the bylaws, right, which will bound all the firms of the network firm, right? So there has to be a bylaws of the network. Okay. And in case for the network, what did we say? They are bound by an internal integration agreement, right? By an internal, they'll have the common quality control policies and procedures. Can they conduct the common training courses and seminars? Yes. Right, the common technology, then common manuals for doing the audit, right? All of them would be shared by them, right? Can they do referral practices? Yes. Right, but then what did we say? Rotation provisions. If one member of the network firm has completed his tenure for the company audit, then the other members of the network firm also cannot do the audit. Then prohibited services also cannot be provided, right? Then we studied one guideline which says that MCOS fee should not exceed stat audit fee for that particular member of the network firm who is doing the stat audit, whereas for others it says it should not exceed 3 times the stat audit fee which has been charged by the member who is doing the stat audit, right? The member of the network firm who is doing the stat audit. Okay, right. And then we saw that last set of guidelines which I had already discussed with you when we were discussing section 224, which was like, members who are deemed to be in practice if they provide the management consultancy and other services, right? Where we had discussed about the corporate form of practice. Okay, now CA, you can also practice in the form of a company, right? So that's the management consultancy company, which is again required to be approved and registered with the institute, right? Again, can CA have full equity along with his relatives of this company? Yes. Can CA become, or what you say, a managing director, whole-time director, manager of this management consultancy company? Yes. Can he continue with his traditional practice? Yes. Can he continue to train the articles? Yes. Right, so that is the guideline 17, which is for the corporate form of practice. Okay, then after that we discussed some recommended self-regulatory measures. So after all these guidelines were over, then we came to the discussion of the recommended self-regulatory measures. Okay, if you are appointed as the auditor of the head office and your firm is a firm with more than 10 partners, it says preferably the branch audit should be given to a firm which is having less than 10 partners. Right? So it says preferably. If you say no, branch is very important, accounting records are at head office, then you only do the branch audit. Otherwise, give it to another firm. Let another firm do it with less than 10 partners. Then what does it say? The practice of appointing one firm with more than 5 partners and another firm with less than 5 partners as the joint auditor should be encouraged. And if the client is willing to appoint these two firms as the auditor, the senior firm, the leading firm, it should not object the same. Right? It should not object the same. Right? Then we studied something called as the ratio between qualified and unqualified staff. Do you remember that? What is the ratio? Okay, there is one CA, like two CAs working in the office, and under that, what do you say, 100 BCom graduates working under them? No. What does it say? 1:5. Right? For every 5 non-qualified staff, there has to be one qualified chartered accountant, obviously to ensure the quality of your services. Then disclosure of interest. Okay, whatever payments you are receiving from the same client through the medium of different firms, you need to make the disclosure for the same. Right? Then there is some recommended minimum scale of fees, but it is anyways recommended, right? Not mandatory. Right? Then what does it say? For any public interest entity, if you are receiving the audit fee which is exceeding 40% of the total receipts of your firm, you have to make the disclosure. Yes, whereas for a non-public interest entity, and for a public interest entity, if it is exceeding the 20%. And this is not applicable if the total receipts fees of your firm is not exceeding the 20 lakh, and also not applicable to the government company, PSU, public financial institution, and so. Right? And then we said, can a CA represent the client before the taxation authorities? Yes, it says he can represent. But what did we study over there? That representation before the court does not include the tribunal. Right? It does not include the tribunal. Right? Then I think we studied around some 33 decisions of the Ethical Standard Board. Most of the decisions of the Ethical Standard Board were regarding 1111 and 412. Right? 1111, which was regarding the permission or engages in any other business or occupation. So what other business occupation you can do along with your CA practice, and then what is where substantial interest is there. You cannot express an opinion on the financial statements. However, you can do the information system work. Right? So we saw those recent decisions of the Ethical Standard Board. And then as a closing ceremony of the chapter, we had our discussion regarding the Yes, what discussion did we have over there? We had the discussion regarding the NOCLAR. Exactly. What is NOCLAR? It is the non-compliance with the laws and regulations applicable to auditor of listed entity having a net worth of 250 crore or more, and the employee of a listed entity. What does it say? But the senior professional accountants, that is the KMP, the key managerial personnel of the listed entity. Okay, right. And then what does it say? This NOCLAR. What does it mean? It's a non-compliance with the law regulation, which could be intentional or unintentional. It could be commission or omission, like, totally you've not complied or partly you've not complied with the law, which is contrary to the prevailing laws and regulations, right? Which could be done by the client, by the TCWG of the client, by the management of the client, or by any third party which is providing these services to the client, right? So client is for CA in practice, and when it is the employing organization, then it says the NOCLAR is done by the employing organization or the TCWG of the employing organization. That means it is for the CA in service. Right? So that is what we once studied. What is NOCLAR? Right. Then after that we came to regarding that what are the examples of NOCLAR? Right? So what are the examples of non-compliance? Right? So again, it starts with the fraud. Fraud means corruption and bribery. Right? So then with that corruption money, what you do the money laundering. Right? You do the terrorist financing. Then you have the proceeds of crime. Then with that, what you do? Yes, you do the manipulation in the securities and other trading. Then you also do the manipulation of the banking and other financial products and services. Then there is no data protection. There is no environment protection. There is no care taken about the public health and safety. And last one, not providing for the tax, pension, liabilities and the payments, right? So those are the examples of the NOCLAR, right? Then we studied the objective of NOCLAR. What is the objective? Not to turn a blind eye to a NOCLAR or a potential NOCLAR is not an appropriate response from a professional accountant. Running away from the situation is not the behavior expected from a professional accountant. right? So that is why it says if the CA comes to know about any NOCLAR or any suspected NOCLAR, he should take the appropriate action. Right, then we also saw the distinct, okay, so now is it some additional extra work which you need to do in the audit? No, it says during the course of audit, if you come across any non-compliance, do you need an expert knowledge of the laws now? It says no, expertise of the laws is not required. Okay, then matters which are clearly inconsequential and those which are regarding the personal misconduct of the employees, are those covered in the NOCLAR? No, that is not covered in the NOCLAR. And in extreme, where there is an imminent breach, you could have the direct access. You can directly communicate the matter to the appropriate authority before reporting to the management. Right. Then we studied the distinguish between NOCLAR versus SA 250. Right. So one, what do we say? That SA 250 is applicable only for an audit, but NOCLAR is applicable for CAs in practice as well as CA in service, and that listed entity ones. Right, then SA 250 talks about the laws and regulations which have a direct effect and those which do not have a direct effect, but which may have a material effect in case of the non-compliance. Right, NOCLAR covers what is given in 250, but it goes beyond that. What does it say? It also covers those non-compliances which could cause the substantial harm resulting in the how you don't remember? You should remember, no? Substantial harm resulting in the serious consequences in the financial or non-financial terms. Right, then what does it say? SA 250 does not define the stakeholders, whereas in NOCLAR, your stakeholders are the investors, the creditors, the bankers, and even the general public. Right, then in SA 250, there is no provision of, directly reporting to the appropriate authority. But in case of NOCLAR, if there is an imminent breach, something which is about to happen, if in extreme circumstances, you can directly report it to the appointing, it is the appropriate authority also. Right, then we came to the discussion regarding the responding to NOCLAR. Right, so who has to respond to the NOCLAR? Professional accountants in service and professional accountants in practice. Right, so one, what they need to do when they are doing the audit or when they are working as an employee, they come to know about some NOCLAR. First, they have to understand the matter. Right, then understand the matter, then what? Don't run away if something is going wrong. Oh, then what you do? You have to address the matter. After you address the matter, you say, no, I'm not understanding. Something is wrong, but what is wrong? Not getting. So you seek the advice. Then after you get the advice, now you decide what is the appropriate action to be taken. Right? Then you decide whether you need to directly communicate it to the appropriate authority. Right? Then you check whether there is any imminent breach. And then finally, what you need to do? You need to do the documentation. Right? So May 23, that was the question asked, responding to the NOCLAR and also regarding the applicability of the NOCLAR. Okay. Right. Then this NOCLAR that you report about the non-compliance with law, will it lead to breach of confidentiality? No, because it is required by the law, right? So when required by law, can you disclose the information? Yes. And then whatever you have done checking regarding the NOCLAR or reporting or discussions and all, right? How you address the matter, all that you need to keep the documentation, right? So it's a trending discussion in your exams, right? Nowadays regarding the NOCLAR. Okay, right. Then after that, we said bye-bye to the code of ethics, right? The professional ethics over there. You don't say bye-bye. Okay, but we have just, like completed with that chapter over there and then moved into a different world over there, into the world of our auditing standards or the engagement and quality control standards, right? In which we said we have like the 46 standards to be studied, but we said no, before we start with our discussion on these standards, we first need to know the terminology. Right, and keeping in mind the requirement of the terminology, what we did, right, we started discussing SA 200. Right, what's the title of SA 200? SA 200. Right, so that is the overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. So how you do the audit as per the standards on auditing. And then we said, what is the overall objective of the independent auditor? Right, what is this overall objective? Right, so standards are applicable to stat audit. So when you are appointed to do the stat audit of the financial statements, what is your objective? To obtain? Yes, what to obtain? What should you obtain? Yes, you have to obtain the reasonable assurance. What reasonable assurance? That the financial statements are free from material misstatement. There is no material fraud. There is no material error. Right? So free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion. What? That whether the financial statements have been prepared by the management in accordance with an applicable financial reporting framework. And then you report, yes, whatever in accordance with the standards, whatever are your findings from the audit. Right? What did we say? Reasonable assurance is a high level of assurance, but it is not an absolute assurance due to the inherent limitations of an audit, right? We also saw the inherent limitations, right? The nature of financial reporting, nature of audit procedures, the other matters, and the timeliness of the financial reporting and the balance between the benefit and the cost, right? We saw what are the inherent limitations of an audit. Okay, right. Then we said free from material misstatement. That means there is no material difference between what is and what should be. That means there is no material fraud or error. And then we saw the term AFRF, right? One of the very rocking term in audit, right? AFRF, the applicable financial reporting framework, right? That is the framework which is to be applied while doing the financial reporting. That is the framework which is to be applied by the management in the preparation and presentation of the financial statements. Like example, for an Indian company, what could be the AFRF generally applicable? Right? We said in the accounting standards and the schedule 3. But if it is listed on the US stock exchange, then US GAAP. If holding company is in Germany, then German GAAP. If bank has given some format for preparation of financial statements, then as per the format given by the bank. Right? So it could either be a general purpose framework or it could be a special purpose framework. Special purpose framework, which auditing standard? Is there any special auditing standard for the special purpose framework? Yes, SA 800. Right? Special considerations, audits of financial statements prepared in accordance with the special purpose framework. Right? So you need to check whether it is GPF or SPF. General purpose framework, common users; special purpose framework, specific set of users. Okay. And then you have to see what type of opinion are you going to express. Right? So whether you are going to express an opinion saying what? Everything I only should say? No. Yeah, whether you're going to express an opinion saying prepared or whether you're going to express an opinion saying true and fair view. Right? If you're expressing an opinion saying prepared, these financial statements have been prepared as per the AFRF. Right? You say, are they prepared as per the applicable financial reporting framework? You say, yeah. They've been prepared as per the AFRF. So that's an example of a compliance framework. Correct. And if you are expressing an opinion saying true and fair, these financial statements give a true and fair view, or you say they present fairly. And generally we use true and fair, but one more alternative given is present fairly. Right? So whenever that fair is coming, that means what? It is a fair presentation framework. Right? That means what? That's the fair presentation framework. Okay. Right? So applicable financial reporting framework, general purpose framework, special purpose framework, compliance framework, and the fair presentation framework. Right? That is what we studied regarding the framework matter. Right. Then we said that CA, whenever you're doing an audit, you need to comply with the ethical requirements, including the independence. Right. So ethical requirements, which we studied in ethics, called as the fundamental principles. Right. And independence not only of the mind, but also the independence in the appearance. Okay. Right. Then we said auditor, whenever you're doing an audit, what attitude you should have? Right. What attitude? Like some, yes, Govinda style attitude, or what you say, some Anil Kapoor, or some you say, ma'am, what old actors, all grandfather old actors name you're taking. Okay, right. So anyways, right, what you need to have is the attitude of the questioning mind. Right? Attitude of professional skepticism. An attitude that includes a questioning mind. Right? What does that mean? Not to accept anything blindly. Not to accept without reason. Not to suspect without reason. Right? That is professional skepticism. Being alert to conditions. Right? What did we see one term yesterday? Okay, auditor is an independent watchdog. Okay, so what does it say? Being alert to conditions which may indicate a possible misstatement due to error or fraud, and a critical assessment of the audit evidence. Like I told you, put oil in your eyes and then you check the evidence. Right? Critical assessment of the audit evidence. Okay, and then we said the professional judgment. Right? So what you have to do, you have to exercise the professional judgment. How do you exercise the professional judgment? That means you are doing the informed decision making. Whatever decisions you take, there is some logic behind those decisions. Right? And where you have to take a decision in an audit, you have to take a decision throughout the audit. Right? So yes, this is what we have discussed so far. And then I had told you that for today, you need to complete with your practice paper 1, in which I had just randomly put the 10 questions of ethics over there. Right? So I am very positively believing and, assuming that all of you have done those particular questions. Right? So what we'll do, we'll just quickly look into the answers to those particular questions. And then after that, we patch up with our discussion for the essay 200, right? Wherein today we are going to discuss the king term, like, the most important, one of the most important term, which is regarding the audit risk. Okay, right? So now, yes, so audit risk, I told you, like for you to get an understanding of what is happening in these auditing standards, right? You have to understand the concept of the audit risk, right? So we will lay down our foundation today, kind of, for our preparation, like we are preparing the soil for doing agriculture, that type. And you can't directly sow the seeds, right? First you have to prepare the soil, right? So that's what we will be doing today, and then getting into the journey of the auditing standards further. Okay,